Good afternoon. I'm very happy to see you here at the Bank of Russia. We are about to begin the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zapotkin. And to begin with, we'll hear the statement by the Governor following the Board of Directors meeting. Good afternoon. Today, we have made the decision to cut the key rate to 15.5% per annum. The economic situation has been developing generally in line with our baseline scenario. Price growth was rather high in January, according to weekly data, but nonetheless, these do not change the overall picture. We consider that this is a redistribution of inflation between late 25 and early 2026. Therefore, it would be correct to analyze the statistics for the last 3 months in total rather than in isolation. I will speak on this issue in detail later. The accumulated effect of tight monetary policy creates prerequisites for returning inflation to its 4% target. Thus, we have continued monetary policy easing. I would now dwell on the reasons behind our today's decision. Firstly, inflation. We will receive full data for January tonight, but as is evident from weekly statistics, prices rose notably over the months. The main reason was the expected pass-through of increased VAT to prices. However, its effect has turned out to be stronger and more concentrated in January as compared to a similar tax rise in 2019. Most companies had decided not to pass on higher VAT to prices last year, but did this in early 2026, which is why this factor had the strongest effect in January. The second factor is price dynamics in certain volatile categories. At the end of last year, fruit and vegetable price growth was atypically low, while in January it accelerated significantly, primarily due to weather conditions, which pushed up greenhouse farms' heating costs. Moreover, because of increased excise duties, prices for petrol, tobacco products, and alcohol beverages were rising faster as well in the beginning of the year. For some experts, January weekly figures were a negative surprise, which they perceived as evidence of a persistent inflation acceleration. Nevertheless, according to our assessment, the slowdown at the end of the year and the acceleration in early 2026 were both transitory, with inflation being virtually carried over from 25 to January 2026. Currently, annual inflation equals 6.3%, which is slightly below our forecast range of 6.5 to 7% that we expected at the beginning of the year. Thus, the dynamics of inflation are generally in line with our baseline scenario. Inflation has approached the same point through its slowdown in November-December 2025 and its subsequent acceleration in January 26 rather than gradually. This redistribution was the reason for lower inflation as of the end of last year. Taking this into account, we have raised the inflation forecast for 26 to 4.5 to 5.5%. The question is whether the effect of the VAT increase has already faded or not. We would be able to give an unambiguous answer only after we receive data for the first quarter. So far, we can see that price growth peaked over the first 2 weeks of January, waning in the second half of the month. I would like to reiterate that this estimate is based on incomplete weekly data. Additionally, I would like to note that full monthly data for January will show an acceleration in some measures of underlying inflation. For example, core inflation. Why? Because it is impossible to strip out all the effects of increased VAT from these measures of underlying inflation. Therefore, the acceleration should not be interpreted as an upward reversal in underlying inflation. As for the risks to inflation stemming from second-round effects of the tax measures on inflation, these risks have not risen so far. This is evident from the dynamics of inflation expectations. In January, households' expectations remained unchanged, while companies' price expectations declined considerably in February after their surge in January and even returned to the levels of last October. Overall, our baseline scenario still assumes that underlying inflation will be around 4% in the second half of the year. Secondly, the economy. Full-year economic growth in 2025 was 1%, which is the upper bound of our forecast. These dynamics are generally in line with our expectations. The growth rate of economic activity has become more moderate. At the end of 25, consumer demand expectedly picked up which was due to the anticipated increases in the recycling fee and VAT. Consumers were seeking to make expensive purchases earlier before price rises. Accordingly, we expect this situation to reverse to the beginning of 2026, that is, consumer activity will moderate. These expectations are justified by, among other things, the high-frequency data of the Bank of Russia's monitoring of businesses for January and February. As regards investments, companies were expanding them at a record price over the past 3 years, which translated into new projects that are now at commissioning stage. They will support the growth of the economy's potential, even though investment dynamics are becoming more moderate. Their heterogeneity across industries remains high. Specifically, sectors related to exports and transportation expect investments to decline from the high levels of previous years. Nonetheless, there are also industries planning to increase investments. We have revised our 2026 investment forecast slightly downwards, but still expect positive dynamics. The gradual slowdown in economic activity is accompanied by labor market easing. Unemployment stays at its record lows. However, the percentage of companies referring to staff shortages as their main constraint has notably contracted and is currently at the minimum level over the past 2 years. Furthermore, companies' wage indexation plans are now more modest than last year. All these are the signs that the pressure put by the labor market on businesses' costs has been weakening. Our GDP growth forecast in the baseline scenario has remained unchanged. The key trends in the economy have generally stayed the same. Thirdly, monetary conditions. Briefly, they have continued to ease while remaining tight. Although yields on federal government bonds and money market rates have edged up, real interest rates have stayed almost unchanged, taking into account the rise in market participants' inflation expectations. Loan and deposit rates have been declining in both nominal and real terms. Corporate lending was expanding moderately in December 2025, January 26, after the elevated growth rates observed in the autumn months. This was associated with the seasonal dynamics of budget spending. At the end of the year, companies usually receive payments under the fulfilled government contracts, while the beginning of the year is the time of advance payments under the new contracts. During these periods, certain enterprises' need for market loans temporarily decreases, although this is a normal seasonal effect. Contrastingly, retail lending accelerated slightly, predominantly driven by mortgages. The rise in the demand for housing mortgage loans was triggered by the expected tightening of the subsidized program terms. However, this was front-loaded demand, and accordingly, it may adjust downwards further on. Household saving activity remains high, while the structure of savings has been changing slightly. In addition to deposits, households' interest in other forms of savings, primarily financial market instruments, is increasing. This trend is quite natural at the stage of monetary policy easing. I would like to note that savings in the economy should be analyzed in total, taking into account both deposits and other instruments. Overall, the saving ratio stays high, and the shifts in its structure do not change this fact. Altogether, the accumulated effect of tight monetary conditions create prerequisites for inflation to slow down to 4%. A few words about external conditions. Trade disputes and global market fragmentation have not had a considerable impact on the current situation so far, although their effects might still manifest themselves in the future. The world economy has continued to expand at a rather sustainable pace overall, supporting the demand for a wide range of commodities. The situation in the crude oil market is different. Last year, oil supply was soaring, which has created a surplus in the global market and is now exerting pressure on prices. The situation for Russian exporters is complicated by sanctions. In view of the global market trends, we have reduced our forecast for oil prices for the next 3 years. Accordingly, we have also adjusted the forecast of the value of Russian exports. The ruble exchange rate has remained stable, although oil producers faced a decline in their export earnings. This was partially offset by earnings from other exports. The ruble remains attractive overall, which is and will be supported by the fiscal rule and sound monetary policy. I will now speak about the risks. The balance of risks remains shifted towards pro-inflationary ones. The main pro-inflationary risks are still associated with a longer-lasting deviation of the Russian economy upwards from its balanced growth path and elevated inflation expectations. In January, households' expectations did not respond to increased VAT. However, we cannot rule out the possibility of these effects in the upcoming months. Crude oil prices also involve serious risks. If oil prices do not rebound from their current levels to those assumed in our baseline scenario, this might accelerate inflation through the exchange rate channel. Pro-inflationary risks stemming from the labour market have somewhat weakened, according to our assessment. As always, we put a particular focus on fiscal policy, both federal and regional policies. The parameters of fiscal policy enshrined in the law suggest its strong disinflationary effect this year. However, the situation might develop differently and deviate from the forecast, for example, in terms of non-oil and gas revenues. If the non-oil and gas deficit increases, we may have less room for cutting the key rate. Disinflationary risks remain as well, the key one of which is a more considerable slowdown in domestic demand growth. Winding up, I would like to comment on our future decisions. At the upcoming meetings, we will assess the need for a further key rate cut. The baseline scenario assumes that the key rate will average 13.5 to 14.5% in 2026. Our updated forecast suggests that next year the key rate should be maintained at a slightly higher level of 8 to 9% for inflation to return to the target sustainably. This is needed because inflation expectations have been persistently heightened. And over the past 4 years, when pro-inflationary shocks have been preventing inflation from declining to the target, inflation expectations have become persistently elevated. They will be decreasing rather slowly, including due to significant indexations of the administered services and tariffs in the next few years. Taking into account all these factors, other things being equal, we should reduce the key rate more smoothly. This will make it possible to bring underlying inflation back to 4% and return the economy to a balanced growth path in the second half of the year. Thank you for your attention. I'm ready now to answer your questions. Dear colleagues, please introduce yourself and identify your agencies. Rita, please. Thank you very much. Rita Shpilevskaya from TASS agency. I would like to put in some diversification into our routine questions about the issues on the table. Can one say that the inflationary peak has been passed, and can one cautiously say that the peak of inflation expectation, easily has been gone by as well? Yes, indeed, the peak of inflation pressure, we believed, occurred in January. But speaking about the sustainable inflation, we believe that the peak took place in December 24. As regards the peak of inflation expectation, we are going to closely monitor this. Like I stated previously, the effect of higher taxation still may resonate with the inflation expectation, although we feel that the secondary effects are limited. But let's hope that the peak of inflation expectations has also been passed. But what is important to us is the speed of their decline, because they remain at a high level, and all throughout previous year they stayed there. Colleagues, please. Nastya in the second row. Sasha Saveleva, Interfax. How can we explain today's softness on the part of the central bank, and what kind of a mistake the market made, even expecting the unchanged neutral rate? Some experts expected that the key rate would go down, but they didn't expect that there would be a soft signal sent. Only in them overestimating the effect of VAT upon the January inflation, and they were scared by such statistics in the beginning of the year. And doesn't your assessment change of an aggregate impact of VAT upon the prices in between 0.6 to 0.7%? Just give me a second. Now, as far as the analysts are concerned, I do not think that they were mistaken. If we take a look at the expectations in the middle of last year. Indeed, the ones towards the key rate staying 3-1 prevailed. So during this week, new data came in very substantial from the Russian Office of Statistics about the money aggregates covering January, also the results of our business monitoring survey, where you could see the kind of demand assessment and the way the price expectations are declining. And actually, this kind of price expectation businesses saw back in 2019, very dramatic upwards growth, and then as the VAT increase and other effects subsided, they saw the same dynamic. So the weekly inflation, which is certainly not a full one, we always underscore it, it doesn't give us a full picture, but at least in as far as the weekly inflation data is concerned, this didn't give us any obvious reason to feel cautious. And I believe that the analysts were able to see the same. I mean, the ones who analyze data, and we even saw that some adjusted their expectation. The financial markets also shifted their expectations, and 15.5% was something that was put into the structure of interest rates. So I believe that our decisions didn't run apart, with the market expectations. Now, as far as the signals is concerned, at this point in time, we have more confidence in that we will be able to continue reducing the QE rate over the next board meetings. And that is also coming from our baseline scenario key rate forecast. And so we bring our signal to be in conformity with this trajectory. But I would like to underline that our signal is not a firm commitment to reduce the key rate. It is not linked tightly to any board meeting. So as I'm saying, we're going to assess the validity of any further key rate reduction based on the data analysis. That's what is exactly we mean. And as far as the aggregate impact of VAT upon prices is concerned, even during the previous episode, the basic transition occurred in January. It was less in December, but nevertheless, we do note that this year, in December, maybe even less than during the previous period, there was a transition. It was very carried forward, it got carried through. And in December, we were saying that it's definitely going to be more than 0.7, because one has to take into account the difference of this particular episode of the VAT rise from the previous one. Firstly, a bigger list of products ended up being impacted by it, and secondly, a bigger number of companies, because the range was brought down, and so more companies ended up being in the payers list. So at least VAT on acquiring and the banking operations, which in terms of the chain effect spreads out, but more precise estimate on the VAT impact and whether there's going to be any secondary effect, I believe one will be able to assess only once having the results of the first quarter in hand. Definitely not earlier, maybe even later than that, because it is more difficult, to know down to the last cent or the kopeck how much in the January price growth came from VAT rise. So nevertheless, the model estimate will definitely be telling us to what extent it might influence the price dynamics in January, the inflation expectations, and the speed of them coming down throughout this year. Yes, the inflation expectation peak has been passed, but for the monetary policy, it is going to be very important to understand to what extent it was significant and speedy they're going, and in what way, how speedy they're going to wane. And maybe those who brought their prices up because of VAT, having noted that the consumers are not really willing to embrace this price growth, they may even partially, pull these price increases back. So, to be honest, to give you any full verdict with respect to the VAT impact, it would be possible only to do that towards the end of the year. Evgeny, in the last row, please. Evgeny Grachov, Izvestia newspaper. Could you please tell us if actual inflation is going to slow down faster than the forecast, but the inflation expectations are going to remain at an elevated two-digit level? What will be the most important factor for you to rely upon when making your key rate decision? Well, we certainly analyze inflation and the inflation expectation. These are the two things interlinked, because if inflation is going to be sufficiently low, or will reach our target level, while inflation expectations remain high, and people will be making their decision based on the inflation expectations, then the risk of inflation not staying pegged to 4% would be very strong. So inflation expectations, against all other things being equal, high inflation expectations would mean narrower space for us to move with the key rate reduction. But we are sure that if inflation is to be maintained at the target level for a longer period of time, inflation expectations invariably start going down. While it might be taking place slower than during the previous period, I enumerated the factors because inflation remained very high quite continuously, and there is a higher tariff indexation thing in place. But, they will be playing against each other, and we will definitely take into account both of those. Mr. Zabotkin, if you can add something, please. A very quick remark. What might happen if one ignores inflation expectations and basically just track the actual price growth? As a result of it, we will end up having not the inflation expectations going down and the inflation slow down. We will end up having the accelerating lending supply and demand, because we will have lower rates against the higher expectations. And so exactly the opposite results will come because what we're trying to achieve is the price stability and a well-balanced economic growth. Dear colleagues, please. Elena? Elena Fabrichna, Reuters. I may slightly repeat Rita's question about what kind of options you had on the table today, whether you were considering making it by more than 50 basis points, and will it be possible something like that this year? We reviewed two options: to keep the rate as it was and then bringing it down by half a percentage point. The discussion revolved around these options. Those who were in favor of keeping the key rate made a stronger emphasis upon the December and January data being quite vague, not clear enough, and so one had to first get more information about inflation's ability to go back to 4%, while others who were in favor of reducing the rate relied upon quite a broad set of information from surveys. I should say that the business monitoring data, which is more advancing and actually quite well correlates with the statistical data, so there was good reasons to really follow this. Now, in terms of possible steps, we're not commenting because it all depends upon the possible situation, the way it evolves. We could make bigger steps, but we could also, go into a pause mode as part of the possible scenario. So it would all depend upon the data we receive. Mr. Zabotkin, I wouldn't even rule out 0.25 if there is any good reason for it. All right, thank you. Next question comes online from Andrei Tvorogov, People's Gazette from the city of Ulyanovsk. Good afternoon. Our readership, to a large extent, is currently worried about the mortgage rates and availability of housing. It's no secret that the market mortgage rate is very much higher than the central bank's one, 21% for the secondary housing and real estate. Based on your forecast, when one should expect the mortgage rates to go down to the level that a family in the region can afford to buy themselves some place to live, at least 12 to 15%? Thank you. The availability of mortgage is a very important factor, truly so, but we also are of the opinion that mortgage offering will be broadly available once inflation demonstrates sustainable decline. What is not less important is for people to make sure that low inflation is a serious thing and for long. In the meantime, the mortgage market rates do remain high, although one should say that they have gone down below 20% by the end of last year. But of course, that is still a high level. But, let's take a look. When the market rates may go down and what these market rates are dependent upon. First of all, the cost of money that the bank raises from individuals and businesses. Currently, it's 13 to 15%. If you add on top of it the credit rates, cost, interest rates, and banking fees, we end up having this 15 to 18% that the banks are offering in the mortgage market. So it turns out that a lot depends upon the deposit rates. For the banks to bring in money. These, in their turn, directly depend upon inflation expectation. You should agree that when somebody opens a deposit, the deposit rates offer is going to protect you from inflation. But if someone expects inflation to be 14%, like approximately it is now, then the deposit rate should reflect these expectations, and therefore the mortgage rates, against the backdrop of high inflation expectations, won't be able to demonstrate quick decline. But again, based on our forecast, already next year, inflation should become stable, around 4%, close to 4%. Of course, one should allow some time for the inflation to stay at that low level so that people can have faith in it being for a continuous period of time, which will positively impact availability of mortgage. Remember 17 to 19, when mortgage was available not at 12 to 15%. It was lower than that, 10% and lower, but due to the fact that since 2017, we kept inflation at a very low level, even below 4%. But one shouldn't really juxtapose this fully from 2014-17, because at that point in time, we didn't have any large-scale subsidized mortgage programs. And I'm forced to continuously repeat, the more we have of a subsidized lending in this economy, the higher should be the subsidized mortgage rate, because inflation is going to really spiral up. Because remember last year, how much was taken? 3,600 billion. So under such conditions, the mortgage rates will definitely turn out to be higher than what we remember seeing in 17 to 2019. Because in 2017-2019, it was just about 120 billion rubles. If you talk about the scale of it. Yes, Mr. Potkin? Just for your understanding of the scale of the influence of the subsidized mortgage upon the middle mortgage rate across the country, the average rate is 7.5%. You see? So that is the average between 6% for the family mortgage program and the market level that we see. But on average, for a Russian citizen, the cost of a mortgage loan is currently 7.5% in terms of its rate. Thank you very much, dear colleagues. Julia, in the third row. Good afternoon. Julia Rostorgova, Market Power. Over the past few years, we've seen quite a few situations where the rights of minority investors have been infringed upon, and the Bank of Russia always acted in their favor. Now, the question is whether there is no need right now to create any special departments to protect the rights of minorities and possibly appoint some sort of a specialty ombudsman. I think, in terms of the special department, I don't know which structure do you mean it to be put in, the Central Bank of Russia or any separate entity. I don't think it will somehow change things around in protecting the minorities' right, because that is the question of legislation and the legal administration. Well, in terms of ombudsman, we do have ombudsmen who protect the businessmen's rights, so I don't know. Julia, I do not see that this will change things around strongly, but as part of our authority, we're going to continue to protect the minorities' rights because we believe it to be principally important in order for the country to enjoy growing investments, because if we want investments to come not only from the government budget or from the businesses' own profits, but also to raise shareholder capital, which in many countries plays a significant role in investment activities. Certainly, the rights of the minority shareholders should be fully safeguarded, and we shall continue working towards this. Please, Sergei. Sergei Bolotov, the Russian Gazette, just in follow-up of my previous colleague's question about the mortgage. Thank you very much for explaining the subsidized mortgage. But I remember last year you heard such questions quite often, and you were saying that the gradual lowering of the rate is not going to expedite the demand. But nevertheless, we remember seeing the demand for mortgage towards the end of last year, not only in the primary market, but also in the secondary market. People somehow were really running head over heels for the mortgage lending at 18 to 19%. So how can you explain consumer behavior like that? Are you reflecting these in your decisions about the key rate? And do you believe that as the key rate may be further brought down, we should expect the spiraling demand for the both market-based mortgage and in the secondary housing? We do not see any spiraling demand for the market mortgage. In the beginning of the year, there was some for the subsidized market because the housing prices really were accelerating because of the growing demand. But we do not link it directly to the lowering of the key rate, because the reduction of the rate definitely brought about a certain higher level of activity in the area of the market mortgage. But the factor of the mortgage acceleration in the end of the year comes from the subsidized mortgage. And indeed, the housing prices, both for the primary ones, speaking about last year, grew by 8.7%, which is higher than inflation, and the demand was more active because people expected the tightening of market mortgage in July. And so such acceleration also took place in the past whenever one would start debating tighter monetary policy, and as a consequence of it for the market-based mortgage. So an acceleration for the housing mortgage and the national lending would kick off. Now, specifically talking about Moscow, there are special factors in the Moscow primary market. The share of proposed housing has increased with a higher level of finished renovation, because when you buy, let's say, something which is just at the peak level, when there's no foundation even, then it definitely is cheaper. But speaking about how prices may be affected by the subsidized market, you should compare prices in the primary and the secondary housing market. In the secondary one, where the subsidized mortgage effect is minimal, there was no notable price growth throughout 2025, and the annual price growth for the secondary housing was less than inflation, 2.9%. In Moscow, even 1.5%. So we do see that the secondary market here is more adaptive, more flexible, and the situation in the housing market is certainly that something that we certainly do take into account, although that not directly affect inflation, but they may affect the speed of the consumer price growth via different channels, like lending to the developers, then profit growth, then investment demand on the part of the construction companies, and various related expenditures on furniture and whatnot. So altogether, we definitely analyze it all. Mr. Zavodkin, please. There's high demand towards the end of the year. In the end of the year, it was related to various fears that the rules of the family mortgage could be changed by February 1st. And the second point, from the point of view of the monetary conditions, how they affect the housing demand and the housing prices, the secondary market is much more indicative than the primary one. Why? Because the average price in the primary market in almost every location, in every city, depends upon the readiness of the development projects, as well as the set of projects that are currently being put on sale, are being offered. You see, so there is a never-ending structural brownie movement, you see, in terms of the housing availability in the primary market, which introduces a lot of adjustments into price dynamics. Thank you. Next question comes online from Evgenia Pismina, Bloomberg. Evgenia, please. Good afternoon. I got a question about the possible confiscation of the Russian assets. The central bank already started its defensive action and submitted a claim against Euroclear in the Russian court. Is Russia ready in response to the Russian assets being confiscated to confiscate something belonging to the European Union, like the media stated, the Norwegian Welfare Fund and European Bank Fund? How many European assets Russia is controlling that it is ready to confiscate in response? Could you please tell us, is it more than 200 billion or less than 200 billion? Another little question, does the central bank look into the possible scenario of establishing the economic cooperation with the United States, and is it ready to start paying for or receiving payments for the Russian exports in US dollars? As far as the response measures are concerned, if the decision is made to arrest the illegally confiscated golden currency reserve, that is the decision that is being made at the level of the country's leadership. How much are we in control of? We're not disclosing this data. I've previously mentioned it more than once. Now, with regard to a possible development of a relationship with the United States, we, as the central bank, we're not, at least for now, involved in this decision-making process. Igor, in the second row, please. Good afternoon. Thank you very much for your work. Igor Shimko, Media Projects. I would like you to ask to be a little bit more specific. Currently, with very expensive funding, there are so many businesses which are on the brink. You see, some go into insolvency, some completely go down. In which way the board of directors of the Central Bank of Russia takes into account this possible pressure and possible business losses when making a decision to reduce the key rate or to keep it? And what kind of things are you monitoring? What is the mechanism that you're using? Yes, indeed, businesses are facing high costs in servicing their debts, but the majority of businesses, with the exception of extremely burdened by loan, the biggest pressure upon your costs comes not from, if you measure up your development plans against your available resources, the costs run by these businesses in their prevalent majority, once again, comes from the operational costs, like price growth for commodities, imports, materials, components, and these are all the consequences of the high inflation. With the help of help of the high key rate, we are trying to fight this high inflation. Now, to overpressure it, to stretch it too far would mean that the demand will fall and it will be below the existing capacities to manufacture products. If that were to happen, then the inflation would very abruptly slow down. It will fall below the target, not for a short period of time, because what happens with us is that during the summer season there is a seasonal decline, but it will stay for long. If we were to see such a risk, we will certainly be reducing we would soften down our monetary conditions that will reduce the key rate quicker, and we will be choosing this kind of a path. That is why it is very important for us not only to be cognizant, not only inflation expectations, we analyze economic activity, we monitor businesses. It is important for us to see almost everything in order to be able to forecast the way things are going to be evolving and to fine-tune our monetary policy. Currently, we don't see any prerequisites for that. And so the key rate reduction, which is happening, and let me remind you that of the middle of last year, we have brought the key rate down by 5.5 percentage points. Let it be smooth, but significant nevertheless. And so our baseline scenario, amongst other things, also calls for the reduction of the key rate that will support businesses. Thank you. Dear colleagues, please. Who is it? Nikita.
Good afternoon. Nikita Mitrofanov. I was the analyst who was expecting the central bank to go into a pause mode. I'm the author of the Economical Telegram channel. My question is about the unemployment. We're having it at a record level, but as far as inflation is concerned, this is a pro-inflationary effect because the maximum number of the possible people who can be working are currently getting paid, and this means that they can spend their wage and create some sort of a demand. This is one side of it. The other side of it is that on the deposits currently, the equivalent of delayed demand constitutes some huge deposit mass. So a situation may evolve into the one when we will be having a 4% targeted inflation. The key rate will go down, but consumers will still have a lot of work to do. They will still be struggling with their demand. They will start spending money for their deposits, or will be applying for more loans because they all got guaranteed payroll, and so they're going to be a risk of the second wave of another inflation. Now, my question is, does central bank take such a possibility into account, and in which way it is thinking to avoid it in the future? Just a little more specific, I should be, because our, inflation target is 4%. Well, truly, we are currently seeing quite a big amount of savings. We're not interpreting it as delayed demand, which against the lower key rate will avalanche itself into the market because we've gone through a considerable growth of real wage, which help people to save not at the sacrifice of their consumption. And the consumption last year actually grew by 3.4%. If you compare it with a period of low inflation, the inflation then was at the level of 2.3%. So consumption has been growing. Savings were being done not because consumption wasn't there. And so the inflow of funds into the deposit continues to happen, even with the reduced rates, because people can see that these rates ensure savings from losing their purchasing power. Now, with the reducing rates gradually, the saving standard is going to follow suit, and that is normal. That is supposed to happen. But that only means that the lesser part of the future income is going to be dedicated to saving. It doesn't mean that people will pull their money off the deposits in their accounts and will go on a spending spree. As I said, we are making very cautious, very balanced decisions, so no dramatic changes in terms of savings propensity should be expected. And that similarly, affects the attraction of, consumer loans, because we see that only the mortgage loans grew, but the non-mortgage loans are not growing. Now, the bottleneck is exactly what you're talking about. The ultimate low level of unemployment, which is good, but against such a low level of unemployment, the possibilities for economic growth are going to be defined by the labor productivity growth, which becomes a key factor. That is why it is so important for the government to make the kind of measures to improve labor productivity. Thank you. Dear colleagues over there, Elvira. Good afternoon, Elvira Nabiullina from Ria Novosti. Elvira Sahibzarovna, could you please tell us, does the Central Bank of Russia support the Russian Parliament's proposal to make all of the real estate transactions conducted on a cashless basis? Do you see any impact from that upon the real estate market? And another question from a different area. How and when the key rate is going to be final and definitive? Well, in terms of the last question, we have a forecast. Our forecast for the next year is to be 8.9% as an average throughout the year. Now, with respect to the proposals coming from the Russian Parliament, we haven't seen them in a specific way. We need to discuss it. Of course, the development of cashless payments is an important thing. Let me remind you that from 2015, we've seen a considerable change in the ratio between between cashless and cash. Back in 2015, cashless payment accounted for 15%, the rest of it was cash. Currently, cashless is 88%. And we've been able to achieve it without looking back or without any jitters and jolts, simply because cashless payments were being made into comfortable, convenient and easy, but we need to take a look at what specifically is being proposed. What am I afraid of? Let's say, if any restrictions or prohibitions are going to be introduced and to be placed upon any cash payment for these transactions, as well as the money changing hands not to move into some shadowy area where the contracts are going to be officially shown in some low prices, while the real money is going to be someplace else. Now, with respect to a second question, we don't see any systemic effect because the situation principally was very much resolved. Dear colleagues, please. Masha. Maria Filushna, Bitkogan. The Bank of Russia has substantially reduced its oil price forecast for taxation purposes. So, based on that is our question. What is the central bank's assessment of the income part of the National Welfare Fund exhausting this income? And what will it do if this risk happens? Our scenario on oil price does not take into its possible thinking that this source of funding into the National Welfare Fund is going to peter out. Yana Zhukov from Expert Magazine. I wanted to ask you a question, partially you have already answered, but nevertheless, as the key rate is being brought down, the banking deposit rates would also fall. Does the central bank see a risk in it? How long it would be profitable to keep one's money upon deposits, and what would you recommend consumers to spend this money on after that? Now, in terms of the deposit rates going down as a risk, which may lead to deposits losing their attractiveness. We don't see this. When reducing the key rate, we also account for the inflation expectations, amongst other things, because the deposit rates need to be in unison with these expectations. So we're counting on that. As the inflation goes down, the inflation expectations would also go down, because if the deposit rates are lower, they will remain attractive, because they will prevent the consumer deposits losing their values because of the high inflation. Because even against low inflation, people used to keep their money in the banks, even in the past, against much more lower rates. So in many ways that is related to the inflation expectation, to the inflation dynamics, and to us, to our prudence and cautious position. Redistribution of savings definitely may happen. I mentioned it, but that's about the savings. Some part of it may flow out into the financial markets, because we do see this activity even taking place now. Greater interest towards the financial market interest, but nevertheless, this is still people's savings being put to good work. Now, let's connect Sergei Shevchenko from Belgorod, Bell Press online portal. Sergei, yes, hello. My question is this. Back in the end of last year, many businessmen were afraid that, with regard to the VAT decision, amongst other things, that would be the tightening of fiscal policy, and that it could bring about a new inflation wave, not only in the beginning of the year, but also subsequently, that there's a bit of a delayed effect, that further decisions may be made in order to raise taxes and tax burden. Do we see such a risk? To what extent it is a tangible one, and to what extent it runs against the central bank's strategy to bring inflation down to target? No, we don't see such a risk. We don't expect inflation to go into a new wave. Yes, tax changes invariably brought about higher prices in January, but that is a one-off spike, a one-off increase of the prices in the economies. The level, rather than trends manifesting themselves, inflation is going to start running faster. We believe, like I said, that the impact from tax changes upon inflation primarily has already manifested itself in January. One may finally see later, but we do expect that inflation will resume its decline, and in the end of the year, it will be around 4.55%, while the so-called sustainable inflation will be at about 4% already in the second half of this year. And the VAT in itself, I mean, short-term effect is price shifts, but in itself and by itself, in a disinflationary way, if you compare it with financing deficit not via high taxes but borrowings, definitely borrowings would have been pro-inflationary in what they would have done. But speaking about the new inflation wave, I believe that the businesses mean that they will have to pass higher costs coming from tax changes into their pricing. But we also see that to fully pass such costs into pricing is possible only if there is a very fast-growing overheated demand. Now, contrary to that, higher cost because of the high tax burden results either in lower profit-making or optimization of other costs. But it is important to mention that based on our monitoring, businesses are not expecting a new wave of inflation acceleration. On the contrary, the price expectation amongst businesses in January went substantially down, back to the level of last year, although the level of last year is still elevated. Thank you, dear colleagues. Rita? Margarita Mordovina, RBK. There is some thinking that some businesses, some small enterprises, because of the growing tax burden related to the card processing, may switch to cash payments or some other methods of payments in order to achieve some optimization. Does the Bank of Russia see any consequences of this? Maybe you have been registering higher level of cash payments or some other alternative methods of payments becoming more frequent. To talk about any possible effect from tax initiatives upon cash or cashless payments, or how strong is the risk for any payments to fall into the shadow market, is premature right now. But we'll definitely be keeping our eye on this and making various conclusions. It's just too early to do this. And dear colleagues, please. Mikhail? Mikhail Moseev, Front Media. In your new forecast, you delayed your inflation target to 2027, and this is not the first time you did it over the past few years. Could you please tell us, do you see in this the kind of risks that the market will no longer trust the ability of central bank to achieve inflation target, as well as the risk for inflation expectations that they will start growing again? And if you do, have you discussed this kind of risk during the board meeting? And why did you decide to really pay it no heed? Another little thing. You yourself stated that the Russian Office of Statistics published its January, hasn't yet published its January data. Have you used some sort of your own estimate? And what kind of inflation in January? Well, first of all, we didn't postpone our target. We didn't delay our target. We're not changing it. It is exactly the kind of target that it stays that way. But in the terms of the annual inflation, we're achieving the target indeed in 2027. But what is important to us is for the sustainable inflation, not the one which is floating about invariably under the impact of one-off factors. And we've got quite a lot of them on the demand and the supply side. But I mean that the sustainable inflation to sustainably go back to the target, and based on our forecast, it is going to happen this year in the second half of it. Now, the annual inflation assessment, and it's becoming higher by 0.5 percentage points, fully is related to the fact that the VAT effect became very concentrated in January. In December, it was lower than our forecast. Oh, so yes, in December. And volatile prices for fruit and vegetables, like we said, they went down very slowly in December because the weather was very warm. In January, they went up, and so this effect from one-off factors, it has shifted itself into January. But from the point of view of the sustainable inflation dynamics, we are not changing our vision. We are not altering our analysis. As far as trust is concerned, it is very important indeed. The fact that you are raising this issue, it is truly an important something. Now, the fact that the inflation expectations have pegged themselves at quite a high level is exactly the consequence of the fact that over the past several years our inflation has been high and we were not able to reach the target. So it is of principal importance to us to low inflation expectation in order to be sure of the sustainable target. And these inflation expectations, regrettably because of the story, are going to come down not as fast as we would like to. Everything has its own price, like this inflation that has been very high during this period. So in as far as the lowering of inflation expectation, it means that we need to pursue a tighter monetary policy. If the inflation expectations were anchored, wouldn't be so much wobbly against any possible risks, then we would have instituted a softer monetary policy to ensure 4%. But we're not, it's not that we're not paying any heed to it. We are seriously taking these things into account, and amongst other things, by adjusting the path of our key rate for next year, understanding that under all of this factor, the key rate will have to demonstrate a slower reduction. Mr. Zabotkin, I shall again repeat what has been written in the press release and what the governor has just told us about November, December, January. Like she mentioned in her introductory word, our October forecast anticipated that inflation in the end of 2025 is going to be 6.57%, and inflation in the end of 26 is going to be 4 to 5%. Now, based on the fact, because of the fact that in December, November, cucumbers and tomatoes did not become more expensive, or were becoming expensive, but not as fast because of the warm season, and obviously because of the price growth on other products has been held back because companies didn't want to end up having a lot of stocks by the end of December and were giving a lot of discounts. So November, December ended up being much lower in terms of the price growth than had originally been expected, both by all us and all the rest when we were looking at them from October last year. So annual inflation, actual inflation in December was 5.6 instead of 6.57. So consequently, as a result of the current year, 4.55, 5.6, 4.5 to 5.5 is lower than 6.57 that we expected towards the end of last year, plus 4.5. So the total inflation, and irrespective of this redistribution, the total inflation within 2 years is going to be lower than the one we thought it would be in October. So inflation is running lower than the forecast we had in October. It is very important to understand it. You can think differently about it. Towards the end of last year, the forecast was 6.57. Out of the weekly figures, we see that it's 6.3. So it's lower than where we're estimated to have the annual inflation in the end of this year. So overall January spike. Yeah, so this is just a redistribution between the two calendar years of the inflation, which is showing a lower kinetic motion compared to the last year. Marina, please. Marina Pimenova, NTV Business News. It would be great to talk about whether in 2022, your colleagues from European Central Bank introduced a notion of climateflation, how extreme weather affects prices. And of course, my question about snow. Everything that fell upon us in December and January, has it reflected itself upon January inflation? Or will it? Like we all know, nature never has poor weather. Now, does it have one, nevertheless, for inflation? Of course, weather generates a lot of impacts, and weather fluctuations do affect the food market in the first place, because we see that the food prices, they are susceptible to much more considerable fluctuations compared to non-food prices. Extreme cold in January, heating costs rise for the greenhouse farms, quickly go into the prices. But, a lot of snow in winter is very good for the crop So our expectations of the crops are quite positive, like the plant growers say. It also may affect the other sectors in agriculture, and such fluctuations are unavoidable. Maybe not in all countries. By the way, food prices in certain individual countries, if these are open markets, they are impacted not only by the weather in their own countries, but also by not only how the global food prices behave. But if the monetary policy is taking good care of ensuring low inflation and keeping it at a low level, then these fluctuations year in, year out, which unfortunately are inevitable, won't make price fluctuations systemic upon different groups of products, because in one year they may be higher, another year they may be low, but taking a look at a lengthier period of time, prices will be growing very close to the general inflation. Of course, in the period of times when prices demonstrate very strong growth, understandably, it makes everybody feel a lot of unease. Take a look at the potatoes, for example, and vegetables. If you take a look at it over the past 5 years, there were years when potato prices grew 90%. Much more than inflation. But there also used to be years during the past 5 years when prices fell by 30%, also much stronger than inflation. But in between these 5 years, the potato price grew not as high as the average inflation index. Therefore, there are such fluctuations. But again, keeping low inflation in itself would narrow down such fluctuations and would not allow it to be systemic. Thank you, colleagues. Artyom. Good afternoon. Artyom Govorun, Invest Future. I'm going to have a question about gold, because over the past several months we've seen quite strong price fluctuations and the gold prices growing very strongly. How does the prices for gold affect the Russian economy and the ruble? And due to the gold price growing, there are some reports from the media say that we've been able to completely compensate for the losses derived from the frozen assets. How do you account for these in your decision making? And well, let me begin by saying that the gold in our golden currency reserves, we've got quite a big share of gold as opposed from different countries. So whenever gold prices grow, the overall valuation of our gold currency reserves comes from the revaluation of gold. Now, with respect to a broad impact from gold prices upon the economy, in this sense, gold is the same kind of export staple like crude oil. So, in the similar token, when we do an assessment of the payment balance and our expectations for what it will be in the future, clearly we talk more about oil prices because it's more significant as a commodity, but we also analyze a whole range of our exportables in terms of the prices and volumes and the overall payment balance, just we take into account as an export commodity. Thank you. The next question comes online from Alina Karashova from Yaroslavl. Alina, go ahead. Good afternoon. My question is going to be about corporate lending. Corporate lending in the second half 2025 demonstrated considerable growth, much higher than during H1. So there was a bit of a leap in November, December. December slowed down, like you said, was due to the contract performance, which was quite characteristic of the year end. My question is as follows. Why does the central bank believe there is no sustainable deceleration of corporate lending despite quite a continuous cycle of tight monetary policy? I mean, the corporate lending speed is going down. If you compare 2025 with 2024, you can see it specifically in these statistics, and the corporate lending dynamics basically runs within our forecast. Last year, it was just slightly above its upper range, upper boundary. Yes, indeed, in H2, corporate lending somewhat accelerated, but that is quite reasonable because we already spoken about the budget seasonality, but it's also quite reasonable against the reduction of the key rate and the lending rates across the economy. Now, if we talk about the impact of it on inflation, every time we underline, and this time we'd like to do it again, not only the lending acceleration is important to us, particularly within one specific segment like corporate lending, although there used to be periods then it would dramatically grow, and we certainly would monitor and trying to understand what was going on and how much of an inertia it is going to demonstrate. For us also too important to monitor fiscal flows. Like I said, lending to corporates and businesses ended up being a little bit higher than our forecast. But the money mass growth, which takes into account the fiscal channel revenue, the money mass growth annualized slowed down stronger than the corporate lending, and so the money aggregates were able to completely fit themselves into our forecast. No, we do not see any major risks in the area of corporate lending, but we're keeping our hand upon the pulse. If anything like that happens, we will respond. Thank you, dear colleagues. Irina. Thank you. Elvira Nabiullina, money doesn't sleep. Looking at the window outside and seeing the weather, we would like to go back to see what's going on inside the house. I will start by saying that the major developers are trying to, seek government support, and we know what I'm talking about, which brought about some concerns among the private investors. Because for private investors, it's also too important to know what does the central bank think about the risks in the construction industry, if there are any, and if there are any, what are they? Thank you very much for your question. Yes, we do monitor financial status of major developers. We do ascertain that most of the bigger ones, and the industry in general, demonstrate stability. Yes, indeed, individual businesses show problems, but they're not systemic ones. And the source of such problems comes not because of the industrial development like that, but the debts they had accumulated during the previous periods. The housing situation, you can see the statistics, is quite stable. The risks that many referred to in the beginning of last year did not manifest themselves. They said everything is going to be just plummet. No, housing sales are growing both in terms of value. They have grown by more than 11%. In volume, also 1%, but still, this is growth. Now, the developers are being funded. They got a special mechanism in place. You see the project finance, escrow accounts, the project finance rates are very moderate, just a little bit over 10% on average. It depends upon whether the escrow accounts are filled. And what's important, escrow accounts protect people. And the banks are interested for the housing projects to be completed because they are part of this project finance arrangement. So we don't see any systemic risks here. The situation is absolutely stable throughout the industry. Thank you. Dear colleagues, Dmitry, please. Thank you. Dmitry, Morocco, Russia 24. Could you please tell us to what extent and how broadly the Bank of Russia applies neural networks? If it does, what for? And to what extent their forecast and modeling is as precise or not as the human experts do? Well, we're trying not to be left out of new technology drive, because you know that overall the financial market, the banks, and generally financial market is quite active in introducing innovation, and I'm sure that people do feel it, including artificial intelligence. Many financial institutions are, using it. We also experiment, but as an assistant, as a human assistant in the first place. First of all, in order to be able to analyze, collect, gather, and digest data with less effort, which enables us to have a better understanding and picture of what happens in the economics. But in as far as the macroeconomic forecasts are concerned, this is the basis upon which we make our decisions. Well, we believe that artificial intelligence so far in this area has some tangible limitation. Why? Because usually AI, comes to various conclusions based on an historic data. But when, like in our economics, very fast-paced change is taking place, any modeling coming from AI and overall, like I've previously mentioned, may it should be based upon various data sets, and so applying AI, we may end up being entrapped by the past, hostages to the past, while we're trying to really seriously look into the future. And so human critical view at various things is still difficult to replace. A human being is absolutely indispensable when unexpected events take place. And to us it is very important whenever we talk about our key rate decision-making. Plurality of views, plurality of thinking, to be able to hear different arguments, and to think and peruse over things collectively and all together. Mr. Zabotkin, maybe would like to say what kind of models we apply. Actually, we are using the kind of models for our analysis, which we nevertheless do discuss, and these kind of models, as well as various program codes, are published, and you can familiarize yourselves with them. Dear colleagues, Natasha in the last row, please. Natalia Trushina, Moskovsky Komsomolets. My question is going to be about the 20th sanction package. The head of the European diplomacy, Kaja Kallas, she announced that this package is going to introduce sanctions against the digital ruble. How dangerous this may be for the project, considering the fact that it hasn't yet become broadly used in Russia. What realistically European Union can do in order to prohibit digital ruble at the technological level? And has the central bank reflected upon the risks of the policy decisions on the part of the unfriendly jurisdictions? My first question. My second question is that the low inflation is very much impacted by the ruble exchange rate, and a negative side of it is inability to place one's capital abroad. So the door was closed on the other side. With the 20th sanction package, this door is going to be shut even stronger. Now the central bank, is it going to change anything in its ruble exchange policy? If so, how much and for how long? And will the regulator expect that the ruble exchange rate may become stronger? Well, digital ruble, I will answer this, and as far as ruble exchange rate, I will give the floor to Mr. Zabotkin. Now, back to the digital ruble. Any attempts to prohibit it do seem to be, surprising, because the digital ruble is the form of the national currency. It's exactly the kind of ruble as the cash ruble, non-cashless ruble. To prohibit the national currency in any jurisdiction, nobody can. Technologically, it's impossible. Our project is developing on its own volition. All the services are being put in place according to our plans. Let me remind you that to use digital rubles to open various electronic purses, to transfer money to each other and pay for anything in shops, you can do it as of September 1st this year. There is a staged plan for introducing this, so practically everything is already in place for that to happen. As far as cross-border transactions are concerned, we continue to be in a dialogue with the friendly friendly jurisdictions to build cooperation at the level of the currencies issued by the central banks. So this work is ongoing. Now, about the exchange rate, Mr. Botkin. Well, exchange rate, Natalia, I can only be very brief on it because the exchange rate is going to completely be following the monetary policy and taking into account possibly all of the factors that you enumerated. It will be the kind that will be, following the low inflation with the target of 4%. And we're also looking at it as the stability of the national currency. Next question comes online from Alexander Gabzo from the city of Archangel. Good afternoon. In Archangel, recently, we see the trend for the public catering institutions and various commercial institutions getting closed, individually placed out in the street as leasing space in some big shopping malls. My question is this: does the central bank observe the same kind of happening in other Russian regions, and why it is happening? Is it some kind of a structural changes? The marketplace is doing more, or kind of doing more? Thank you very much. We definitely see these coming because of the impact from the structural changes, because the structure of the public catering is going to change, and it has been changing very strongly. You see that there is a growing demand of home delivery services, ready-made food. Definitely that is being rolled out across the country. Cheaper, convenient. I think it's good for consumers. It is also, it stimulates competition, and the marketplaces also stimulate competition and plays up to a low inflation. You mentioned that restaurants and cafeterias are being closed down, but I may tell you that across the country this sector feels quite confident, because since last year it has demonstrated growth at 50%, incremental 50%, and last year was no exception. Public catering demonstrated 9% growth in Archangel, almost the same trend. Public catering grew 8%, a little bit less than in the rest of the country, but throughout the past 4 years, 45%. But this is a very volatile sector, a very high and strong competition, and so the things that we're talking about, like marketplaces and home delivery, affect it very strongly. Some close, some go out of business, but for example, as far as consumption metrics of it are concerned, no, we don't see any consumption demand going down, even in Archangel region. Anna, in the last row, please. Anna Gromova from Anna Finance blog. You partially have responded to the previous question about the developer who asked for help. But what do you believe? Whenever we talk about such a big company, should the government help it? Maybe one should send some sort of a signal, and what the investors should really expect to happen, the ones that have invested money into a construction project and are sitting and waiting for their housing to be made available. Well, the shareholders, the stakeholders, the investors are guarded by the system of escrow accounts, and as far as possible, financial measures to be applied to such sector companies. It is the authority of the government to offer the best possible methods. Ekaterina Litova from Vetmasti. I'm also have a question about the developers, but slightly from a different angle. In the middle of last year, the amount of housing, or the number of people who were not buying housing in installment, the total amount was worth 1 trillion rubles. Doesn't the central bank see the possibility of arrears, non-payments, contracts being severed, because the central bank on more than one occasion was saying that the risk of such a contract is very high, because people are not protected like they would have been if they were to buy buy their housing using a mortgage program. As far as installment payment system is concerned, you're quite right. We know that there's being risky because this installment thing is temporary, and then everybody would expect that, that it will have to be refinanced, that a mortgage loan would be made available, but automatically that would not happen. So we were quite concerned by it. Therefore, we're closely monitoring the market, and I can tell you that in the meantime, the level of terminated contracts or severed contracts is stable, not more than 5%, but we're watching out for it. Yes, thank you. And by the way, we recommended the banks not to allow a big period of installment payments, delayed installment payments in the project, to keep it at a minimum. Thank you. And I suppose this is going to be the last question. Natalia, please. Natalia Kutovskaya, Pro-Finance. Russia's international reserve as of January 30th reached about $827 billion, and within 1 week they grew 5%. Could you please tell us, this growth, does it come only from the fact that the price of gold grew, or there were also other sources? Well, lately, our global international reserves have been growing because of a positive revaluation, which comes to a large extent from a growing gold price and the depreciation of dollar as opposed to other currencies. No other factors are there. Thank you very much, dear colleagues, for very interesting questions. Thank you.